Good morning, everybody. Good morning. Good morning. Coffee Conversations with Greg J is on. We are here. We are alive. We are kicking. Just standing in blessings right now. That's what we're doing. It's just been an incredible year, hasn't it? 2020. Today is September 1st. Tuesday. Whew. How are you doing today? How's your life? How are you handling this quarantine time, these changing times? We're starting to hear a regularly thrown out phrase that says our new normal. It's the new normal. I guess. A lot going on, but we hope that you're staying safe. We hope that you are practicing all of the precautions and everything that they are putting out there, wearing your mask, social distancing, doing the best you can in this here COVID-19 environment. Fascinating discussion today, Coffee Conversations with Greg J. The last couple of weeks, last week we dealt with emergency preparedness, and I'd like for you to go back on our Coffee Conversations with Greg J. Facebook page or on YouTube or on the website, beachcityradio.com. Look at that and get some information on how to keep your family safe in the event of a disaster. That's very important information. We'd like for you to check that out. And yeah, let's just get into it today. We'll go to these headlines on today. Headlines. The headlines are talking about in the August 16th premiere of the HBO show Lovecraft Country, created by Misha Green and based on the novel of the same name by Matt Ruff. The main characters drive past a sign that reads, "Niggers, don't let the sun set on you here. Understand?" Towns that banned African Americans in the mid-20th century would, or either formally or informally, put up intimidating signs like that at the town limits to remind blacks passing through that they were not welcome. These places, commonly known as sundown towns, existed across the nation, and many were here in California. That's a story coming out of the California Black Media Network, and you can go to beachcityradio.com and find out. Some of our communities locally here where we're originated, Long Beach, Southern California, LA area, you would be surprised that they were sundown towns. I'm talking about Inglewood, Hawthorne, Torrance, where we are the majority, you know what I'm saying now. And it's very, very interesting, but that's from the California Black Media Network. Associated Press reports that President Donald Trump is plunging headlong into the latest eruption in America's reckoning over racial injustice with a trip today to Kenosha, Wisconsin. And that's over the objections of local leaders who have asked him to stay away. And man, I don't know why he feels like he needs to do that. And there it is. He's going out there to Kenosha. And, the city has been riven by protests since August 23rd shooting of Jacob Blake, a black man. They shot him 7 times in the back by the police. And Trump has defended a white teenager who's accused of fatally shooting 2 men in Kenosha last week and accuses Democratic rival Joe Biden of siding with anarchists and rioters. Trump will not be meeting with Jacob Blake's family. An island park in Michigan has been turned into a COVID-19 memorial garden. It's a stark reminder of the terrible toll the coronavirus has taken as officials across the U.S. plan to reopen schools and public spaces. Hearses led the processions around Belle Isle Park in the Detroit River. That's where more than 900 large photos of virus victims provided by families were turned into posters and staked into the ground. They had dreams and plans and a story, Michigan Governor Gretchen Whitmer said at the park, and they weren't finished yet. May they rest in peace. While the punishing summer of COVID-19 is drawing to a close with more than 183,000 dead and over 6 million infections in the U.S. since the pandemic began, many experts fear an even bleaker fall. They suggest that American families should start planning for Thanksgiving by Zoom. According to the California Black Media Network, menthols, Swisher Sweets, and other flavored cigarettes are now illegal in California. California Governor Gavin Newsom signed Senate Bill 793 into law on August 28th. The legislation is one of the country's strongest restrictions on flavored tobacco. The bill makes it a crime for any retailer or individual to sell a flavored tobacco product or any tobacco product flavor enhancer in the state. Violations will be punishable by a fine of $250 for each infraction, and the law goes into effect January 1st, 2021. The governor says, I have been expressive in terms of my absolute condemnation of this tobacco industry that continues to find ways to target our youth, Newsom said before signing the bill. And it will be a point of deep pride and personal privilege as a father of four and as someone who's had many, many family members die at the hands of the tobacco industry to sign that bill. I can't be more explicit. I can't wait until it becomes law in the state of California. SB 793 breaks big tobacco's death grip on longtime users hooked on nicotine, said Senator Jerry Hill, who is the author of the bill. He said that the addition of fruit and other alluring flavors to the products are tactics tobacco manufacturers are using to entice a new generation of smokers, the youth. The action by Governor Newsom and by the California legislature this week is a huge win for our kids and the health of our communities. So, y'all, you know, your Newports, your Cools, all that, that's going to be about to be illegal, I suppose, in California. According to the CDC, 7 out of 10 African-American youth between the ages of 12 and 17 who smoke prefer menthol cigarettes. And African-American adults have the highest percentage of menthol cigarette use compared to other racial and ethnic groups, the CDC says. That's been a hot topic here lately in our community. That's why we wanted to bring that story straight from the California Black Media Network. So as the new normal has wreaked havoc in our lives, so many changes, right? So many inconveniences. We don't know what's happening. We're just trying to live it one day at a time. But it also presents many opportunities. So as we reset our walk in this life, we begin to contemplate the financial impact. Investing in the stock market, long-term financial planning. What do? Forex, Bitcoin, traditional stocks? Well, today we're going to examine our financial portfolios in this COVID-19 world. And for that, we bring on, yet another expert. We're going to bring here Andrea L. Collins. She's a financial expert, a financial consultant, and we're just going to bring her on, let her tell us a little bit about our money. Got our mind on our money and our money on our mind. Good morning, Andrea. How are you today?
I'm good. How are you? Can you hear me?
Okay, I can hear you now. Yes, yes.
Good. How are you this morning?
Oh, doing all right. Just one day at a time. Your family good? Everybody good in this COVID?
Everyone is good. Thank God. Thank God. We hear so many disparate stories, from different families. Everyone's family is being affected by this pandemic differently, in more ways than one. Health-wise, economically, the position that we're in is not a one-size-fits-all position. So, it's important that we check in first and foremost with each other, as a community, as friends, as family, and not take certain things for granted.
Yes, absolutely. It's making everything real clear, isn't it?
Yes, crystal clear.
Relationships, everything.
Yeah.
So let me ask you a question there, Ms. Collins. Now, all right. When COVID-19 first hit, we saw the stock market kind of dip and go through all kinds of conflagrations and everything. Is it wise to begin to, invest now as the stock market goes through such topsy-turvy reactions?
Well, the question about when and what time, or what is the most opportune time to begin investing, is very subjective. You know, it really depends on each person's individual circumstance, situation, their time horizon, their risk tolerance. All of those factors combined really sort of what makes up your appetite, for lack of better words, of investing. For those that do have the expendable or disposable income or resources to jump into the stock market or to add additional to their already existing allocations, there's always a good time to invest, especially if you have a long-term time horizon, because your time horizon is what allows you to be invested for the long haul. And you have the ability to withstand or sort of go for the ride of the economic cycles. And the time frame or the time horizon is what allows you to recoup any sort of losses that may occur in certain situations, such as what we're in now. So yes, if you do have the economic resources or financial ability, yes, right now would actually be a good time to invest. Of course, being wise in what you're investing and making sure that you are fully diversified and not heavily tilted towards one sector or the other, always mitigates risk. But definitely, yes, is a good time now to seize the opportunity.
All right. Before we go forward, because I got a couple questions to piggyback on that. But before we go forward, explain to the people what your expertise is before we get into the meat of the matter.
Well, I've worked in financial services or wealth management for over 15 years now. And my expertise is portfolio management, analysis, and sort of taking a macro approach to wealth management. That means analyzing your entire strategy when it comes to building and preserving sustainable wealth, not only for yourself, but for your family and for generations to come after you, depending on whatever your desires would be and how far you would like your legacy to reach. It's not only familial, oftentimes it deals with leaving a legacy within an organization, an institution, a company. So being able to take that macro approach and apply it to your everyday decision-making and financial planning.
Mm-hmm, mm-hmm. All right. So now, when we begin to consider, okay, I want to make some investments, we're seeing a lot online about Forex and Bitcoin and all of that kind of thing there. What are those type? What is best? Traditional stocks, bonds, commodities, Forex, Bitcoin? Where do I start?
Right. Get in line with that question, Greg, because that is literally a question that I face and I receive every single day, you know, from people that I actually know, from friends, from colleagues, down to someone standing in line at the grocery store if they know what you do. You know, that's the never ending question. Like, what's the latest, greatest thing, or what should I be investing in now? And again, my answer is always, it really boils down to what type of investor you really want to be, how heavily involved you want to be in the market and in research, how interested you are in actually learning and paying attention to the way that the market moves. And do you want to really have that sort of involvement in your overall investments? If you do, of course, there are nuanced investments that you can get involved in: Forex, Bitcoin, alternative investments, hedge funds, you know, and the list is vast. If you want to remain a traditional investor, there's ups and downs and volatility with that as well. And so the approaches are just as varied as the number of hairs on your head, to be honest with you. My advice at this particular time, especially in the economic situation that we're in, is to make sure that greed and overreaction does not dominate your investment decisions. You know, oftentimes we teeter on that fine line between opportunity and sort of trying to make quick or fast money, you know, and we know with that comes a lot of risk. Sometimes if you're lucky, it comes with a lot of reward. But if you're going to be an effective investor and your intention is to generate wealth, it's important that you make prudent, sound, disciplined decisions and that you remain diversified and you're not always caught up in the hype of chasing the latest, greatest, next investment opportunity.
Okay, so what's a safe time frame that I should be looking forward in should I begin to invest? With that said, what you just said, you know, I want to be safe and everything, but I'm coming into it. I know it's for the long run and everything. How far ahead should I be how much time should I be adding to my hope for the future?
Well, again, that really depends on an individual basis. So for short-term investing, meaning that you need access to, let's say you have excess cash, you need access to that cash within 3 years. That is not any form of savings that I would put into any investment sort of solution. I would not invest that into the stock market or any other, like I said, investment solution. If you know for a fact that you have a particular chunk of resources that you need to access within the short term, because what you're doing is exposing it to risk and vulnerability. So if you need if you have a chunk of money or resources that you know that you need access to in the short term, that is more appropriate for something like CDs, savings accounts, high yield checking accounts, things that normally generate a very, very low return or yield, but you know that it's safe and it's liquid, meaning easily accessible. Resources that you have that you know that you won't need to touch for midterm or long term, meaning anything greater than 5 years, extending all the way out to 10, 15 years, and even into retirement, you have the capability to take on a lot more risk because, like I said, time is on your side with those particular resources. You have the ability to withstand the ups and downs of market cycles and also to recoup any sort of losses that you may have incurred during those cycles.
Mm-hmm. So now let me ask you this. All right. So I'm a novice, right?
Mm-hmm.
But I have a little bit of money saved up and I say, COVID is hitting and I want to I'm a beginner. So what do you think? What would you counsel a beginner on how to start? Like how much money, I guess that's subjective also, but how do you counsel a beginner, a novice at this investing thing?
You know what? I think that now more than ever, and maybe like within the last few years, has been a really ripe environment for novice investors to get into the market and not sort of feel inhibited by the lack of information, resources, or exposure. Decades ago or years ago, or even when I sort of started in the industry, it really was more intimidating for the novice investor. They felt that if they did not have a certain asset level or a certain amount of assets to manage, that investing was not necessarily, there was no place for them in that world. But now, with most companies or in brokerage firms going to reduced or zero commission, or fees for trading, like there's no barrier to entry at this point. So you can literally open an investment account with $0 and start buying fractional shares of these major companies. Whereas if you did not have thousands of dollars to at least buy one share, you were completely excluded from that investment environment. So the fact that the barriers to entry, I think, have been lowered, I would advise a novice investor to jump in there, to take charge and control over seeking information, to asking questions. I get a lot of people that come to me that are novice investors, and primarily it's because of the fact that they see my picture, on the website where I work, and it looks familiar. You know what I mean? So the fact that they feel that they have someone they can go to and ask questions, I think is very important, regardless of what your asset level is, to take the time to ask questions, number one. Number two, to realize that more time in the market is far greater important, has far greater importance than trying to time the market versus saying next week, should I wait until next year? Or, time in the market, giving yourself enough time to reap the benefits of compounding and your gains growing, at a far higher rate and for a longer period of time is more important than trying to time the market or picking the perfect time to invest. So my number one advice is always to just start, to begin somewhere. Open an account. There are, like I said, plenty of firms now, or brokerage firms, where you can open an account. There is no minimum to open an account. There's the access to information.
So I can just start with $100 and get cracking.
You can start with $0, and whereas before you would have to go into these places and actually fill out an application and have the account open, in a paper format. Literally, you can open an investment or brokerage account in minutes now, in 2020. There's no reason for the majority of us, if not all, to not have an investment or brokerage account at this point, not only for ourselves, but for our children. It's the availability of that is endless. You see it on all of these apps, Cash App, they even allow you to buy stocks now. So
oh, wow.
there's no barrier to entry at this point.
So let me ask you, so the African-American corporations that are publicly traded, so I mean, I'm now processing what you're hearing. I'm taking notes, y'all, like y'all. Yeah. I'm trying to see, okay? All right, so I watched a media company drop way down right at the beginning of COVID. I mean, it went way down, but then I saw them make a pretty sharp jump and everything. And I feel like that I didn't do it, but I was gonna. And what you just said about, just jump in. So, I probably will take that good advice. But, are there many publicly traded, African-American corporations? And is there a list that the people can look? We're in a time now where we're seeing, quite frankly, we want to take care of our own and support our own infrastructure. And how is there a list of like African-American corporations that we can look to that are publicly traded and we can begin our research and then call you up and make those buys?
Yeah. So there are lists that are always available. You know what I mean? And like I said, the internet is vast at this point. There's nothing that you cannot find or research on the internet. I know recently, especially during this pandemic, and in so much uncertainty, there's always opportunity. So I think that it's important for us to keep a focus on the opportunity in the midst of such calamity. So there has been a huge push within our community to buy Black, to bank Black, to invest in Black and to recycle economically within our community. And I think it's important to do that. And I think that it's important for us not only to do that in the short term, because we see this rise in investor sentiment is what they call it. It's like investors on a whole sort of reshift their mindset or turn their attention towards something. And so we saw that happen during this quarantine, where within the Black community, we had this sort of laser beam focus on recycling Black dollars, right? But the important thing to remember is that cannot be a short-term focus, because short-term focus of us sort of infiltrating and pouring in dollars and then extracting it can almost be as detrimental as not doing it at all. You know what I mean? So if it could actually be disruptive and cause a lot of volatility if we're looking to just pour an influx of resources or investment or, financial capabilities into a company, even that's publicly traded, and then we go and sell the shares or extract it. That causes so much disruption and volatility, and it actually puts the investors at a detriment. So I think it's important that we recognize that if we're going to do that we do it for the long term so that it's not as disruptive in the market. One major thing that came out last week was the unification or the merger of Broadway Federal and First Bank. Those two Black banks, one being based in Los Angeles, Broadway Federal, and the other in DC, have now combined their resources to have $1 billion or more in assets or resources. And the combination or merger of businesses, of financial institutions within our community, hopefully will have a longer standing impact, which is what we need. We don't just need a handout per se, but we need sustainable resources when it comes to lending, when it comes to home ownership. And if we have mainstays within our community that are strong, such as those two institutions, I think that provides a lot of hope for our community. And both of those companies are publicly traded, by the way. So
Right. I agree with that 100%. And here Sivan Parchman is saying in March of this year, he bought 40 shares of Zoom at 126 a share. And in 6 months, he's more than doubled his money. FYI, it's currently $443 a share. I know Sivan. And
Yes.
look, hey, Vaughn, you're going to take me to lunch now. You got some money.
Club, right?
See? Good. Hey, Vaughn, I'm gonna need a lunch right now. You're making all that money, my friend.
Mr. Parchment, I would just take it one step further, and kudos to you, for being invested, for taking part in this particular opportunity. I want to make sure that people or investors are often mindful of where they hold their assets. Asset location is very important, and it's something that's not often talked about or even understood. And when I say asset location, I mean being mindful of where you actually buy your investments, in a taxable account versus a non-taxable account, or a tax-deferred account. Tax-deferred accounts are like your 401ks and your IRAs, meaning that you do not pay taxes until you go to make your withdrawal. And hopefully at that point, the tax bracket that you're in is in a much lower tax bracket than what you're in currently. Also, because you don't pay taxes until you withdraw, the ability to compound your gains in income tax free stretches way further than if you were to be paying in a taxable account. So make sure that you have a good balance of where you buy these actual assets and in what type of account, so that you're able to maximize the potential of both.
All right, let me ask you this. So now, okay, so I'm in the game. I'm alongside Vaughn, and I'm making all this money because I bought into Zoom and everything,
right.
and
which we would have never known, because that was something that was completely unforeseen, right? Like think back to December or January of this year. How many people were really familiar with the capabilities of Zoom, right?
So let me ask you this though. So he's made this money, right? And so, just say I'm a novice, right? And I'm painting the picture. I bought into Zoom. I'm now, I'm rolling. I'm gaining all over the place.
Right.
What are the signals I should look for when I say, okay, it's time to pull out so that I can, liquidate my profit?
Right. So there are a couple of things that you should look for. There are 3 risks that equity investors usually face, and those fundamental risk, valuation risk. Fundamental risk really has to do with their credit capabilities and a company's ability to remain solvent, meaning that their balance sheet is intact, meaning that they have the ability to, for lack of better words, pay their debt. And so when you look at the fundamental health of a company, it's important to be able to understand their financial capabilities long term. So are they able to, like I said, pay their debt and to address what their liabilities are? Because if they're not, and they're overly valued, then eventually a good investment can turn bad, or you'll reap losses for years to come, even though the company was a good investment to begin with. So paying attention to, like I said, the fundamentals of a company is very important. Not just, like I said, the latest, greatest, next, stock investment, or what you're hearing on the streets. There are a lot of fundamentals that actually go into evaluating a company.
All right. So now, maybe I don't have the time. Well, I mean, I know we need to be mindful and be good stewards of our investment, but I'm just going to ask this question. Maybe I don't have the time to be researching Zoom and how they're performing and their credit worthiness and all that stuff. Is that what you do? Or do I have somebody on my team that that's what they do?
Right. So you know what, to be honest with you, I always say that no matter how much of an asset level you have to manage, from $50 to $500 million, it is so important to make sure that you have a team. And I don't mean high-powered, expensive, people behind. I mean, if that's what your wealth management requires, then by all means do so. But by a team, I mean someone that you can check in with for advice, and not necessarily fee-based advice, but that you can bounce ideas off of, that you can ask those questions to whose job it actually is to do the research on these companies and risk analysis, and to understand the fundamentals of not only the companies individually, but what's going on globally, economically. There are people that actually have those jobs, so the same way if you go into a hospital, you're not going to try to take over a doctor's job because you read something on WebMD. We still go to the experts for very specific things. So my advice would be to lean in on those experts. And oftentimes advice, there is no cost to it. You just have to take the step and ask the question. Now, of course, if you have someone managing your account and placing trades for you and they're doing everything, that type of advice often does come with a fee. Sure. But to ask questions, or to have someone do an initial review of your portfolio, you should be able to walk into any firm or brokerage company and have that done at least once or twice at no cost, just to get an overall opinion or evaluation. So asking the question is very important, and leaning on others' expertise when it comes to building a portfolio.
Right. You just said something that piqued my interest. You mentioned the word global, and we consider ourselves a global company here at the Hannibal Media Group, producers of Coffee Conversations, Dream Creator, Beat C8. We are linking and building bridges of music, arts, and culture with Africa. Right. So then let me just ask this question. Is the stock market a good way to begin investments in companies operating very strongly in Africa?
Yes, I think it's important that, I've seen investors from literally one end of the spectrum to the other. Some, they only want to focus on US, and then others, they want to have a diversified approach between US and international. And I think that right now we should pay heavy attention to the fact that we're in a bull market is really attributed to tech and, those specific FANG stocks, FANG meaning Facebook, Apple, Netflix, and Google, right? The bull market run or the overperformance of the S&P has a lot to do with the heavy allocation towards those specific stocks. What we have not really taken notice of is that the average international stock has outperformed U.S. stocks, and it's cyclical. And we were moving into that cycle where international will outperform the U.S. equities. And so I think it's important for investors to pay attention to that, because it allows you to remain diversified in your approach. And diversification is what sort of stands as a hedge for risk, right? It allows you to not lose everything that you've invested in one fell swoop. So having a focus on international and, of course, regional, depending on the regions of international investments is very, very important.
Here's a question here. They're saying, are managed portfolios the best for busy people?
Okay, that is a wonderful question. And I'm glad that you asked that, because I do have a lot of experience in portfolio management. And I would not say that it is, I wouldn't look at it from the lens for busy people, because it's important to keep in mind that when you do have a managed portfolio, you're paying a fee for that. It's an advisory service that you're paying a fee. And portfolio management literally ranges from about 0.8% all the way up to over 1.5% of assets under management. So to justify paying a fee, what makes you feel that you're getting your money's worth? Performance is a huge leading indicator, right? So I wouldn't say that it's the best buy for busy people. It is the best buy for someone that is willing to pay a fee for advice and put the performance and the overall well-being of your portfolio into an expert's hands. But you have to have some sort of knowledge or understanding of that particular portfolio manager's performance, what their strategic and tactical shifts are. Strategic meaning how they're allocated across the board, how well the portfolio is diversified. what their investment methodology is, meaning what drives their investments, how do they make their decisions, and then also their tactical approach, meaning what type of changes do they make in certain economic environments. And we're in the midst of one where we should have a boatload of examples of how managers, money managers, portfolio managers operate. This pandemic has literally gave us on a silver platter everyone's, the way that they move, basically, and how they shift in this type of uncertainty. So I wouldn't say that it's the best route for busy people. It's the best route for someone that wants to pay a fee for expert advice, but you still have to have some sort of involvement when you're choosing a portfolio manager, because you have to have an understanding of how they create the portfolio, how they diversify the portfolio, and like I said, what type of strategic and tactical shifts they make in certain environments in order to justify you paying that fee.
All right. So here's Vaughn. He's back again. He's saying the rule of thumb is to invest in what you buy or in what is deemed a necessity: clothing, diapers, food manufacturers, and things geared towards children. Also, streaming sites are a good investment. They laughed when Netflix went public, and who's laughing now? That's from Vaughn.
Exactly. Vaughn, you sound like Warren Buffett, buy what you know, and that is a lot. That's a huge part of many investors' methodology, that's where they feel most comfortable in. That's their sweet spot. Like I said, they can justify the investment because they either have an affinity for the product, they have some sort of connection with the product. They believe in the overall growth or value of the company. And that sort of sentiment allows you to withstand the rides that the company will take, over the years, especially if you're invested in it for the long term. And then oftentimes you do get those Netflix, situations where you were into it when it first came out, and you're able to capitalize on those gains as well. So yes, that is a huge part of many investors, like I said, methodology or their way of investing is to buy what they know and what they're comfortable with.
All right. Explain to us Forex. What is that? Everybody is, you see it all over social media. I mean, I don't think a day goes by that somebody in my news feed is saying, "Hey, you could get in, send me $10, Forex." And then explain that. What is the difference between that and traditional stocks?
Well, so traditional stocks, of course, you have your different sectors in traditional investing. So you have consumer discretionary, meaning what most investors or what the general population buys when they have an excess in cash, things that they can go spend extra money on, maybe like McDonald's or Starbucks. Then you have your consumer staples, which are actual necessities, things that people buy no matter what, like your Kimberly-Clark's or the companies that supply toilet paper. And you have, communications, information technology, healthcare, pharmaceuticals. And, there's a boatload of sectors for traditional investing. And then you have foreign exchange or Forex, which literally invest in the different exchanges in other countries. So right now with Bitcoin, Forex, I would just caution any investor to really make sure you do your homework and your research. And again, consult the experts when you are diving into that, because we're in an age, especially with technology and information technology and AI, that you have the ability to be taken advantage of when it comes to making a quick dollar, or, just like you said, give me $10 and you can make X, Y, and Z amount of money in 10 minutes. Or, those sort of investments are still not necessarily for the novice investor. For instance, another type of investment or strategy are options trading. And that's a huge one now that I've seen an uptick in interest as well. And, people are calling me left and right, like, how do I get involved in options trading? But knowing from the inside out that there is a certain type of approval process that an investor would go through, and a certain level of understanding and investing and in the stock market, an experience that someone would have to be able to trade at certain levels. So when you see those opportunities, like you said, where just give me $10 and you can make X, Y, and Z, or this huge uptick in these type of strategies, I would caution any investor, like I said, to really make sure you do your homework and research, because there are a lot of scams out there, and people are being taken advantage of because of the vulnerability of many right now, especially in this economic environment. Many are looking to take advantage of those that are suffering and have an appetite for increasing their sort of disposable income and generating, fast money.
Mm-hmm. So options trading. So that's like what? Like investing in pork bellies and that kind of stuff?
No, options. I like, for lack of better words, I like to equate options. It's similar to placing a bet on the adverse of what you think a certain security or stock or the market is going to do. In just very simplistic terms, there's calls and there's puts, and so you basically buy a contract for a specific date on the calendar, and for a specific price. And what you're betting that the specific stock is either going to go up to this price or fall below this price by a certain date. And so you buy contracts in multiples of 100. So one contract equals 100 shares of a specific security. And you either exercise the contract, meaning that you actually place an order for that, or you allow it to expire. So options can be very lucrative if you're involved in watching that specific stock or the market. But again, it's perceived that you can make, fast money, but it's still heavily nuanced when it comes to understanding the full capabilities of that investment. And like I said, I've seen an uptick even in social media of people training people on how to trade option strategies and really making it seem a lot simpler than what it actually is.
It sounds like I got to have a lot of vigilance. Sounds like I got to have a lot of vigilance in that one. I got to keep my eye on that one. With investing, some people really would like to just put it in something and throw their hands up and not pay attention to it. And it's like you open this box and all of a sudden there's a huge amount of return in there. But it's literally like, likened to taking care of a plant or a newborn baby. Just because it lives in the house with you, you can't ensure that it's going to grow up to be a fully functioning, productive adult. You have to be involved. You have to nurture it. You have to check in from time to time. You have to be able to make shifts and changes depending on what the environment is presenting at that time. And it's not like a one size fits all approach, because as we're evolving, our investments should evolve. We go through different life phases. You go from accumulation to preservation. There's different life phases, and each of those phases require some sort of different type of attention that we should be placing on our investments and our wealth generation as a whole. Now, let me ask you this. What type of investment, let's say people are in their later life, and they might have a little, they want to now get into investments. What would you say to the seasoned folks who don't have a long time, but they want to invest in and provide, perhaps a little more financial security for the future?
Right. So a solution that many investors, especially those that are nearing retirement and they want to create some sort of solid source of income for themselves, they seek dividend paying stocks, because what that will allow you to do, like I said, is create a solid source of income in retirement. So there are particular companies that pay dividends, and then not only pay dividends, but have a history of increasing the dividends that they pay over time. So that if you were to look into dividend paying stock, that would be sort of one of the criteria that I would place on investing in stocks that pay dividends. Like, not only do they pay a dividend? Because as we've seen in this pandemic, many have suspended their dividends, but there are specific companies that continue to pay their dividends even in this type of economic crisis. And like I said, have a history of increasing their dividend payment year after year after year. And so what that will do is lock in the income that you're receiving from your portfolio, because dividends are separate from the actual stock performance. The stock performance is driven by market cycles and investor sentiment, and the dividend performance is driven purely by the overall health of the company. So companies that have a history of increasing their dividends, sort of like the proof is in the pudding. It shows you how healthy their company is if they have the ability to consistently pay quarterly dividends and increase those over time, year after year.
Mm-hmm, mm-hmm, mm-hmm. All right. So now there's a question. Can you explain pump and dumps and tips on how to avoid them?
Pump and dumps. I'm assuming they're talking about when someone buys a stock and then they quickly get out of it. Is that what they're referring to?
Okay. All right. Well, let's see. How about this? Someone says, Vaughn saying options are risky for novice investors. Also, instead of selling in time of crisis when the market seems to be crashing, seize the moment and buy more. Mm-hmm. We have to teach our people and especially our children how to invest at an early age. And I think that's even why we're here. We want to get the information.
Absolutely. I agree with that statement. And then if the previous caller or person that wrote the question, if they wanted to clarify what they meant, I'm happy to go back to that question as well.
Okay, so they were saying yes. So I guess when you were asking, I guess when you said what you assumed they were meaning by pumps and dumps.
Yeah. So, when we saw that happening also, this pandemic has given us so much material to work from and provide a lot of examples. And those are called, we've seen that happen in zombie companies. And zombie companies basically are companies that normally would not be able to withstand this type of environment without the sort of fiscal stimulus that they've received from like the Federal Reserve or, all of these monies or aid being pumped into the company to sort of prop it up, for lack of better words. So if you were to literally research or Google zombie companies, a boatload of companies or potential companies will come up to where you would know that their balance sheet is really not sustainable. The real reason why they're able to withstand this sort of crisis is not because the company is healthy and not because it's outperforming in the market. It's really because of the aid or the stimulus that they've received. So the way that you can avoid those type of companies is basically, again, it just circles back to, like I was saying before, you have to do your research. There's no quick way or, fail-proof way to do this without actually being involved, unless someone is literally buying and selling for you, and then, like I said, then that's their job to do the research. But if you're a self-directed investor, you have to make sure that you're informed and not just following the latest, greatest trend, especially if you want it for a long-term investment.
Mm-hmm. So I need to be have my mind on my money and my money on my mind.
Exactly.
All right. So Andrea, I'm sitting here, I'm listening to you and everything, and I can't help but wonder, what time does your day start?
Oh my God. For so many years, I get up, I'm up around 5:30 in the morning. And, early in my career, especially, things have changed a lot in the investment world. But early in my career was still the traditional be there before the stock market opens. You got to be ready to take the first trade. And, it's just like that exhilaration and excitement. So I'm up very early in the morning. And a huge part of it has to do with my drinking my coffee, because I have to start my day with that. And you have to be informed. So reading multiple publications, watching the news, as doom and gloom as it can be these days, it still behooves you to know what's going on, not only locally, but globally, because all of those pieces of the puzzle fit together to provide what we're faced with today. So I start my day very, very early. And the reason why, like I said, is because I have to be informed, not only for myself and my family, because, although this is my career, I do have a family that I'm trying to build generational wealth for as well. So the advice that I give to everyone else, I give the advice. It's the same advice that I apply to my own life, and it really is important for you to stay abreast of what's going on. And I don't mean reading economic data and charts and having all these graphs and, those, leave that to the analyst, but at best, you need to know what's really going on globally and how it affects the markets.
I think the most sound advice today that we've heard is, buy what you know. I mean, if I know and media and technology, I know about that. That's probably a good, safe investment because I know that industry and everything like that. And I think that's a good place to start. I mean, that's what I've learned out of here. The one Vaughn was talking about diapers and clothing and all of that. You said Kimberly Clark, like those toilet paper. I mean, that all makes sense to me.
Right.
Things that I know and seem solid. And then when I get my first, million, then I can go for more risky situations.
Well, yeah. And I wouldn't say that those are more safe than others. How I would phrase that or categorize it is that you have a more inherent interest in understanding what's going on because those are products or companies that you utilize. Mm-hmm. So when it comes to financial literacy and learning, the learning curve, when it comes to investing can seem pretty steep for some. And so if you are buying what you know, the level of interest that you will take in understanding how that company or those stocks are moving and working and how everything fits together, I think the interest is peaked a lot more than buying something that you don't understand or utilize.
Mm-hmm. 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 All right. Somebody asked a question about going back to the international question. What is the best way to buy international stocks, particularly on the African continent?
So there are a plethora of ways that you can invest internationally. Through certain brokerage firms or investment companies, you have the ability to place international trades. And usually that involves a specific department. Mm-hmm. If you wanted to go the route of something a lot less complicated, you can always do that through an ETF or exchange traded fund or a mutual fund. You can do that in commodities, meaning, things that we utilize and that we trade. For instance, when I say commodities, I mean like gold, silver, coffee, you know what I mean? The natural resources. So, and again, you can buy commodities through an ETF or through the actual index or commodity itself. And again, those sort of nuanced trades would have to be placed through a broker. But if you were doing it on your own, again, I would start with an ETF or a mutual fund.
All right. So, Andrea, you have a book, and that was really the title of our show today is A Word to the Wise. Mm-hmm. Tell us what you're saying to the people through your authorship.
Well, I wrote A Word to the Wise in 2019, and it really is sort of a derivative of common themes and words and questions that I got throughout my career in wealth management. And what I realized working with so many clients and people and, children of different or various backgrounds, meaning economic backgrounds, cultural, race, and religious, there were common themes or questions or words that always came up. And I just compiled 30 specific words that I believe that if you really understand the true meaning of what those words are and really employ them into your life and into your family, that you are able to not only create a certain mindset about wealth and understanding, but you're also able to create a sustainable legacy, whatever that may be. And wealth does not mean the same to every single person. Wealth is dynamic. your legacy, the legacy that you want to leave is dynamic, but you should have a clear-cut focus on what that means to you and what it means to your family. And it starts with introspection, meaning that you have to understand what money means to you and where those ideals come from. And it's really rooted in perception and perspective, which really stems from our childhood. And I don't think we talk about enough how the impact of what we're exposed to as children when it comes to finances really, really impacts the decisions we make as adults, and how we utilize our resources and what our perspective is towards those resources. So that's what my intention for the book was. It was to create some sort of introspection and then spark a conversation between you and your family and what type of legacy that you want to leave, and to create a clear roadmap for that.
Mm-hmm. Mm-hmm. So someone's asking now, they're asking, is the book on Amazon? I know it is. I saw it.
Yes,
And,
I have it right here, actually. It is on Amazon. So it's called, I don't know if you could see this, A Word to the Wise.
Word to the Wise. There you go. And then we have the link up there. Our super producer just put the link up right now. Book, Word to the Wise, available on Amazon.com. Let's go.
Yes. And, again, my intention for it was to be very simplistic. There's nothing that's going to go over your head in the book. There's no figures. There's no statistics. There's no charts. It's not analytical. It's a lot more to do with your mindset and really, really digging deep to sort of shift the way that you think about money and resources.
Mm-hmm. That's what we're trying to do. We want to make sure that we are economically sound. We're getting the information out there, because you know what? Hey, let's face it, we're in a revolution and we need to be hitting on all cylinders.
We definitely are.
Economics is the engine driving to our new, face of our community. We've got to get that economic situation together.
We do. And I think that it's important that, everything moves in cycles. Every market, every industry, it's cyclical. And we couldn't have foreseen this happening right now. But as a community, if we were in a position to take advantage of the opportunity economically, meaning we have savings, we have additional resources to take advantage of those opportunities, then, we wouldn't be in so much of a, for lack of better words, bind at this moment, and be facing so much disproportionate wealth, during this health crisis. So we have to be mindful of making sure that as a community, we support each other in being prepared for opportunities such as this.
Mm-hmm. Let me ask you, I suppose this is a really abstract question, or maybe not. Is a gold standard better than, a dollar-based economy?
Well, I wouldn't necessarily say gold, because gold has not outperformed the US dollar, even though with the way that the interest rates have fallen to an all-time low right now, the US dollar is projected to be weakened over the next couple of years. And, again, that's a natural cycle that happens when every cycle creates a new change or a new opportunity for leadership. And we're entering the cycle where the US is not necessarily going to be a leader, for the next couple of years. And that's to be expected. But it's, what do you do with that opportunity? And again, diversifying your investments, making sure that you're not completely over allocated or heavily allocated into one sort of sector or type of investment, but to really make sure you're spread across the board so that you're able to capitalize on opportunities in other places where some aspects will be falling short for a while.
Mm-hmm. It'd be very interesting to hear your perspective on my next question. Has Trump been good for the investment community, like he claims?
It depends on who in the investment community you're talking about, Gray. Are you talking about business owners? Are you talking about high net worth investors? Are you talking about the average investor?
Like y'all. What I mean,
certain clients, he's been very good, to be honest with you,
okay.
but again, you cannot ignore the huge economic divide amongst certain communities. So
Okay.
that question really said, like, who are you posing this to, or for, or against, and for some, I will say,
Okay, so who am I talking about? All right. So let's talk about it. Like who's okay. For us novice investors, is he good for the novice investor? Clearly he's good for the folks that are buying millions of shares a day, right?
Right. And so, I mean, you could say yes if you look at what novice investors choose to do with the stimulus that they receive. You know what I mean? If that was something that was needed to keep them literally afloat, then they don't have the opportunity to even utilize that to invest. You know what I mean? If you were able to use the stimulus or the aid that was received during this sort of pandemic, then maybe it did give you an entry point and you're able to capitalize on some of those gains. In his latest tax bill that he's proposing, also that companies or employers don't tax, or they don't withhold the Social Security tax for the next couple of months until the end of the year. That may benefit you in the short term because you'll have more take-home pay, but in the long term, they're going to have to double up those tax withholdings in 2021. So it's like a give and take. It benefits certain novice investors in the short term, but as far as generating long-term impact, then no. You know what I mean? And my answer would be an emphatic no. No.
All right. Well, Andrea, we are approaching the end of our time together, but I'd like to know, what would you like to say to the people as we go out? And we also want to we want to call on you from time and time again to come on here and share with us your vast knowledge. We got Vaughn did bring a comment. He wanted to thank you for sharing your knowledge.
Thank you for participating.
We definitely, echo that. It's valuable. And this is, especially in such a time as this, we really do need to be about our economic situation here on all aspects, whether it's just keeping the household afloat to extending our long-term capabilities through investments. And what would you like to leave the people with today?
I want everyone to really be mindful that wealth is not just wages or what you earn. That wealth encompasses so much more, and it includes home ownership. It includes your investments. It includes other assets that you're able to pass down from generation to generation. So we have to expand our mindset and making sure that we're able, like I said, to take advantage of opportunities in each of those areas if we're going to expand economically as a community. As of 2016, you would have had to combine the net worth of about 11 and a half Black households in order to match the net worth of one white household. That means we need 11 and a half Black families just to equal the net worth of one white household. So I just being mindful of this pervasive economic divide, and that it really has not closed, or we haven't made a huge amount of progress in the reduction of those inequalities since the 60s, and it's really easy to get caught up in the fanfare and the cheerleading of our community without really having the numbers to back up what we're what we want to progress towards. So we need to keep our minds focused on the fact that wealth is not just one thing, it's dynamic. And how are we able to create these opportunities within our community, not only for our generation, but for generations to come, that our children are able to inherit certain things, because that is what gives them a leg up, in our own community, and how important it is to actually have a plan. And that has nothing to do with the amount of assets you have. If you have $2 to your name, you need to have a plan of how you're going to effectively and efficiently spend that $2. And again, it boils down to your mindset. So that is what I would encourage people to think about as we move forward.
Yeah, that's awesome. All right. How do we get a hold of you? Your
Well,
website,
yeah,
the
so I'm always available. I mean, the place to go these days for anything professional is LinkedIn, of course. You can find me on LinkedIn. It's Andrea L. Collins on LinkedIn. Message me there, and I am more than willing and ready and happy to respond to any questions or concerns that anyone has. I always say it's my greatest duty to not hoard this experience or my experiences or exposure or knowledge to myself. I owe it to my community to share it. So I'm more than willing to share what I know and with anyone. So if you have any questions, any type of concerns, anything you want to work towards when it comes to building wealth, please reach out to me.
All right, Andrea L. Collins, financial expert. We're so proud of you, and we are so thankful to you for sharing your knowledge and extending the things that you have learned and your experiences out there in these financial markets. Look, I've learned a lot just today in this just very basic conversation. I thank you so much. I'm about to call you up.
Call me anytime, Greg. I said, I am more than willing, and we have to do that. We have to share our resources and our wealth with our community and be ready and willing to do that, at all costs, because the vitality and the sustainability of our community depends on that.
It's interesting, Andrea. I see all of those books back there. I'm going to ask you. I'm going to ask you what I ask my grandsons every time I talk to them. What you reading?
Well, right now, it's Dr. Joy. Hers is post-traumatic slave syndrome. Have you read that one?
Okay, I'm sorry. I didn't hear that. Yes.
Post-traumatic slave syndrome. I just started reading that. Yes. So that, and periodically I will go back and reread books that I've already read, whether it was in college or, years ago, or even something up in last year, because just to, you get a new perspective every time based on your experiences and what you've been exposed to. You can reread a book and look at it from a completely different lens.
Absolutely. And I'll let you know that we are seeking to have Dr. Joy DeGroy on Coffee Conversations. We'll see. We're getting there. Good stuff. All right, y'all. So there you have it. Andrea L. Collins. She is your resident financial expert. Coffee Conversations with Greg J. Let's get out there and get these trades in now that we have a bunch of knowledge to work with. And thank you all so much. On Thursday, you can also see this on our Coffee Conversations with Greg J. Facebook page. It'll be replayed and there it just lives there, and also on beachcityradio.com, Kalimba Song Coffee Company Facebook page. You can also see this. We're out there, we're accessible. Go back there and you can go through the whole library since we've been doing this fantastic conversation, service to the community, trying to let everybody know, get some knowledge, get some information, and also be inspired, in such a time as this. This is what we need, some inspiration. On this Thursday, if you all recall, we did a special edition on last Friday for the March on Washington. And, the guys were there in Washington, D.C., out on the mall, on the steps of the Lincoln Memorial. And, we didn't have the benefit of a great connection because, they were out there amongst the tens of thousands of people. But we're going to have them on Thursday, Pastor Tulos and Robert D. Bush on Thursday, to report back what they saw, what they experienced, and what they hope to gain from the National Action Network's Commitment March that's on Thursday. And then, we're putting together a show about the sports. We see the sports leagues are protesting. The NBA, the Lakers and the Clippers voted to cancel the season because they're sick and tired of all this police violence that's happening out there. Black Lives Matter. Sports is different because we're in a pandemic, the quarantine. The U.S. Open is going on right now and no people in the stands. That's like crazy. Baseball is happening. They got a recorded audio of the crowd noises differences and everything. Everything is different. So we're going to bring some sports experts on to Coffee Conversations so we can just kind of take a look at that. You can check us out all the time. Coffee Conversations with Greg J. Don't forget Columbusong Coffee Company, columbusongcoffeecompany.com. Get your coffee imported farmer direct from Cameroon, West Africa. All right. All right. Love one another. Love one another. Love one another. Peace and blessings.